Hey traders, in this video we're going to be discussing 3 reasons why you may be failing as a trader. These are going to be mistakes that almost every new trader makes and that you can easily avoid to help yourself have better odds of success in your trading. So make sure to stay through the entire video because these 3 things alone can be the difference between failing as a trader and being a consistent and profitable trader. So without further ado, the first reason that you may be failing as a trader is going to be risk management. Now I know it's probably something that you've heard time and time again if you've been studying trading for a while, and it is a little bit of a boring conversation, but it is hands down the most important aspect of trading. Without it, you can have weeks or even months of consistent small profits, but one single big loss that wipes out all of those previous weeks or months. So it is crucial to your trading, and there are multiple different aspects of risk management in trading. It's not just as simple as cutting losses on your losing trades. You also have to factor in things like your position size. So let's go ahead and take a quick look at the chart GNS. GNS was a big runner recently. We could see a couple weeks ago it was trading at a low of 30 cents. And just yesterday it hit a high of $6.28. Now if we take a look here at the intraday chart for GNS, we could see that there is a low at the market open just above $4 per share. So we'll go ahead and draw a line there. Now, just for this example, let's say that you were looking to trade the opening range breakout here in this stock. So once this candlestick here, the second candle after the market opens, crosses above the high of that first candle, that's when this is technically going to be considered an opening range breakout. And the way that you typically would trade that strategy would be to use the low of that first candle, again being at about $4.04 in this case, as your risk level. So if this happens to have a false breakout here and pull all the way back down, you would want to cut losses and get out of that trade. Again, that is going to be step number 1 with managing your risk. It's simply going to be to cut losses according to your strategy. But again, the other aspect of risk management that not many people talk too much about is going to be having the proper position size for the specific trade that you're getting in. In this case, because the opening range breakout happens here at about $4.40 per share, and we know that our risk level is all the way down here at about $4, that means that we would have to be risking at least 40 cents per share on this trade. So just for some easy math, let's say that your maximum risk at any given time is going to be $400 per trade. That means that the most that you would want to invest into this trade would be 1,000 shares, because 1,000 shares multiplied by the 40 cents per share that you're risking is going to give you your maximum loss of $400. Now obviously this is going to be different with every trade. Not every trade is going to be as clear as this one may be, but generally speaking it is very important for your risk management to make sure that you're not getting into positions that are much too big based on your maximum risk and based on how far away the price is from your risk level. The second reason that you may be failing as a day trader is that you are probably occasionally chasing stocks. Chasing happens when a stock is starting to take off, it's spiking up quickly, and a lot of people on social media and in different chat rooms and different trading groups will be talking about that specific stock. And because if you've been following my channel for a while, you know that trading has a lot to do with psychology. One of the aspects of trading psychology is FOMO, which is fear of missing out. And when people see that everyone is talking about a specific stock and it's spiking up very quickly, what can happen is they start to get FOMO, or that fear of missing out, and they'll buy into the stock even if it's against their trading strategy and even if there is really no good reason to be buying the stock at that price. That's what chasing is, and that can very easily lead to a quick 20, 30, even 40% loss on your investment if you're not careful and if you're not managing your risk. So if we take a look here at BXRX, for example, this was a stock that was gapping up this morning. We can see that in pre-market it ran from about $3 per share all the way up to a high just before the market opened of $6.25. So it was up over 100% today in pre-market, and we can see that right out of the market open there was just a very quick small move to the upside from the opening price, and then it fell all the way back down to about $4 per share where it's currently trading now here midday. And this is something that we very commonly see with these stocks that have a big gap up in pre-market. A lot of people will get distracted by everyone talking about that specific stock, or they'll kind of feed a little bit too much into the news headline that drove the stock up in the first place. And they start to chase this stock and start to think that it's going to just run higher and higher and higher at the market open. which of course that would be a gap and go, and those do happen from time to time. But more commonly, what we see happen at the market open is reality starts to set in a bit, sellers start to take control, and then a lot of the people that just chase the stock in pre-market are now going to be forced to sell at a loss once the stock starts to fall. Okay, so a very easy way to kind of help you avoid chasing stocks is to simply invest into a scanner or invest into a trading group or chat room that's going to help you find out about these stocks before they actually start to spike. Now, obviously, it's impossible to predict when a company is going to put out news or a press release to drive the price of their stock up, but with scanners and with a team of traders that are all working together, you can find out about these stocks much more quickly than you would on your own. And even in the case of BXRX here, once this started to have this initial spike up in pre-market, there's a very good chance that you'd be able to find out about this stock in the low fours if you're using a scanner or if you're trading with a group, and you can ride this all the way up to over $6 per share here in pre-market, whereas you're simply less likely to do that if you're trading on your own. So here, if you look at the screen, we can see an example of the scanners that myself and the Market Master trading group use every single day with our trading. All of these scanners are streamed live to our traders, and you can see we have the top percent gainers and the top percent losers. We also have custom scans like the breakout scan, the scanner for stocks crossing above and below their VWAP. We have the oversold scanner, and then we have the trending up scanner. The good news is that there are countless different ways to customize scanners so that you can find stocks that are specifically meeting the criteria that you look for with whatever strategy you're using for your trading. The third reason that you may be failing as a day trader is that you're getting distracted by different stocks every morning. Like BXRX here, we have different stocks every single morning that will gap up big in pre-market because of some kind of news that was put out by the company. And with this gap up, there's going to be a lot of volume, there's going to be a lot of attention on these stocks, and there's going to be a lot of volatility. Now, those are great things for day trading typically, but if you're not yet comfortable with your risk management skills, there is no reason really to be focusing solely on these types of trades. At the end of the day, they're going to be higher risk, and they are going to have the potential where you can quickly lose 10, 20, 30% on your trades. So what I like to recommend is to try to focus more on stocks that nobody is really paying any attention to. For example, earlier in the Market Master group, I posted that COSM was trying to go red to green, which just means that it's trying to cross above the previous day's closing price, and that there seemed to be a lot of demand in the mid fours over the last few trading days. If we take a look at the chart for COSM, we could see that this is what I was referring to when I said there's a lot of demand in the mid fours. If we just go ahead and draw this line here at 450, we could see that every time it gets down to that 450 area, there's a nice bounce off of that level. It's turning into a level of support. And after I posted that this morning, we could see it once again bounced off that 450 level, started to break above VWAP, and just recently we saw a lot of volume start to come back into this trade, and it actually just spiked up into a volatility halt. So this would have been a great, very profitable trading opportunity by paying attention to this stock that really nobody else was paying attention to at the time. So now before this big spike up that just started to happen, this might have looked like a very boring play, but these boring plays can lead to explosive profits, and they're also going to be a little bit lower risk. So I recommend that you keep a list of stocks that were recently big runners in the stock market, because if they're a big runner in the past, what can happen, just like we see here with COSM, they can find support, they can consolidate, and then they can have another big run in the future. Okay, so those are 3 big reasons why traders fail in today's market. I highly recommend you try to avoid these mistakes, follow the tips that we talked about throughout the video, and I'm very confident that you'll see some improvements in your trading. If you like this video and found it helpful, please make sure to give it a like and subscribe to the channel so you don't miss out on future uploads. And if you want to learn more about day trading, swing trading, and long-term investing, or join us in our daily trading group, you can find more information and get signed up at my website, Master the Market, which will be the first link down below in the description. But anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.